In prior videos, you've learned about gross pay, fringe benefits, pre-tax and post-tax deductions, federal withholdings, which we calculated with the IRS publication 15T, wage bracket and percentage tables, as well as state and local taxes. In this video, we're finally putting it all together and computing net pay. Net pay is the amount the employer receives after all deductions are subtracted. It's also known as take-home pay. It is the amount of the check or the direct deposit that you see in your bank account. As a reminder, the deductions on the paycheck fall into three categories. They're mandatory deductions, and federal, state, and local taxes fall into that category. Next are mandated deductions, which are ordered by a third party, such as garnishment or union dues. Now, voluntary deductions are something that the employee signed up for or did not opt out of at work, like insurance, retirement contributions, for instance, 401k, charitable contributions, and so on. Here's an example of an employee's paycheck. In this case, the company XYZ uses ADP for payroll processing. We can see the name of the employer, XYZ, and the name of the employee, Jane Harper, social security number, and tax information. The payroll information is for the current period, but also has year-to-date information. There are three major sections: earnings, deductions, and other benefits and information. In the earnings section, we see regular pay, overtime, holiday pay, and tuition, which looks like tuition reimbursement that the employer provides. In the deductions section, we can see federal income taxes, Social Security tax, Medicare tax, New York State and city taxes, as well as union dues, 401k, stock plan, life insurance and loan deductions, and there's also life insurance adjustments. In the other benefits and information section, we see a payment for group term life, the year-to-date loan payment amount paid, as well as vacation and sick time hours left, and Jane Harper's title, which is operator. In the important notes section, the company communicates changes or announcements. The check on the bottom of the page shows the net amount payable. This can either be an actual check that the employee deposits, or if it's a direct deposit, there would be a note that shows the bank account the amount was deposited into. Let's work this example step by step. Mile, who receives a salary of $2,000 paid bi-weekly, has earned $46,000 year-to-date, is married, filing jointly with one dependent under 17. The checkbox in step 2 is not checked, and the W-4 is from 2020 or later. Mal works for Core Inc. in Charleston, West Virginia, where the state income tax is 6.5%. The pre-tax deductions include medical insurance of $50, a cafeteria plan of $75, and a 401k of 3% of gross salary per pay period. There's a charitable contribution of $10, union dues of $62, and a court-ordered garnishment of $120. Taxable income computation is the same for both federal and state income tax purposes. We started with a gross pay, which we were told is $2,000. Sometimes you have to calculate the period pay because the exercise only provides you with the annual pay. However, in this case, we know it's $2,000. Next, we subtract the pre-tax deductions for pre-tax medical, cafeteria plan, and 401k contributions to arrive at taxable earnings. It's important to remember that the amount of $1,815 is the federal taxable wage. For purposes of calculating the FICA taxable wage, which is used to calculate Social Security and Medicare taxes, we don't deduct the pre-tax deduction for the 401k. That means that the FICA taxable wage is $1,875. We then subtract all mandatory withholdings, starting with federal tax. We find the federal tax by looking up the federal taxable wage of $1,815 in the tax table for biweekly payroll for years 2020 and later, and finding the tax for married filing joint taxpayers who did not check box 2 on the Form W-4. That amount is $74. Mile also has one dependent under 17 years and receives $2,000 per year or prorated $83.33 for biweekly payrolls as a reduction to the tax table. The dependent deduction would reduce his tax to a negative amount, which is not allowed. It can only reduce it to 0. Now that we figured out the federal taxes, we move on to the Social Security and Medicare tax, which we calculate by applying the Social Security tax percentage of 6.2% and the Medicare tax percentage of 1.45% to the FICA taxable wage of $1,875 for Social Security tax of $116.25 and Medicare tax of $27.19. The Virginia tax rate is 6.5% of $1,815. By the way, we use the same taxable wages for federal and state withholding purposes. So that means that we multiply $1,815 by 6.5%. Next, we deduct the voluntary withholdings for charitable contributions, union dues, and garnishments, and arrive at net pay. Let's look at another example. Kenzie is a full-time employee in Austin, Texas, who earns $4,450 per month and is paid semi-monthly. She's married filing jointly with one dependent under 17 and has indicated Step 2 checkbox withholding. She has a qualified health insurance deduction of $50 per pay period and contributes 3% to her 401k, both of which are pre-tax deductions. Her additional withholding amount for Step 2 is $150.75. What is her semi-monthly net pay? Note, use the wage bracket table. We start with the gross pay calculation by dividing the monthly salary by 2 to get the semi-monthly wage of $2,225. We deduct her pre-tax deductions, which we were told is medical insurance for $50 and 3% for the 401k, which is $66.75. Once we deduct the pre-tax deductions from the gross pay, the result is the taxable earnings of $2,108.25 for federal taxes and $2,175 for purposes of calculating FICA, because the 401k deduction does not reduce the FICA taxable wages. How do we calculate the federal taxes? You go to Appendix C of your textbook or use the IRS tax tables in Publication 15T for semi-monthly payroll. You find the amount of $2,108.25 in that tax table. Why are we looking for $2,108.25? Because that is the taxable earnings amount for federal income tax. In the problem, we were told that Mackenzie is married filing jointly, so we need to look in those columns of the tax table, and we were told that the checkbox in 2C was checked. That tells us that we need the second column withholding amount, which is $175. But we're not finished yet. Mackenzie also has one dependent under 17, for which she's entitled to a reduction on her income of $2,000. We need to divide the $2,000 by 24 to get the amount per paycheck, which is $83.33, for a tax amount of $91.67, plus the additional withholding of $150.75, for a total of $242.42 for the federal tax withholdings. Very important, the amount that remains after deducting the dependent deductions cannot be negative. So if the dependent deduction is greater than the tax that you looked up in the table, the net amount is reduced to zero. You'll see that in the next example. The next step is to calculate the Social Security tax, which is 6.2%, and the Medicare tax, which is 1.45% on the FICA taxable wages of $2,175, for a total of $166.38. The total of all deductions is $408.80, which leaves us with net pay of $1,699.45. Let's look at this next example using the percentage method. Stark is a full-time exempt employee in Little Rock, Arkansas, where his state income tax is 5.9%. He earns $40,250 annually and is paid semi-monthly. He has indicated that he is married, filing jointly with two dependents under the age of 17 on his 2023 Form W-4. He has checked the box on step 2 of his W-4 and has $75 additional income tax per pay period. His pre-tax health insurance is $100 per pay period. Stark contributes 5% of his pay to his 401k. Assuming that he has no other deductions, what is Stark's net pay for the period? So step 1 is calculating the gross pay by dividing the annual salary by 24, because Stark is paid semi-monthly, which results in $1,677.08. Step 2 is to calculate the taxable wages for federal taxes, which means we subtract all pre-tax deductions for health insurance of $100 and 401k, which is 5% of $1,677.08 or $83.85. That gives us a taxable wage for federal taxes of $1,493.23. We also need to calculate the taxable wages for FICA, which means that we only deduct the health insurance in our example from the gross wages, which results in $1,577.08. Now we're ready in step 3 to calculate the federal taxes. We do that by looking up $1,493.23 in the percentage table of married filing jointly, box 2 checked, in the semi-monthly payroll period. The third row includes our taxable wage amount of $1,493.23, and we complete the calculation by subtracting $1,035 from the taxable wage for $458.23, and I'll multiply that amount by 12% for $54.99, to which we add the tentative amount of $45.80 from the table for a total of $100.79. Next, we calculate the dependent deductions by multiplying the two dependents under 17 times $2,000, and then dividing the amount by 24 to obtain the semi-monthly amount, which is $166.67. Now, super important, the net amount after subtracting the dependent deductions from the taxes can't be negative. In our case, it is because $100.79 minus $166.67 is minus $65.88. So we can change any negative amount to zero, but still add any additional tax amount, which in this example is $75. So after all of our calculations, the federal tax withholding is $75. Okay, now we're ready to calculate the state tax of 5.9% of $1,493.23, which is $88.10, and FICA, which is 7.65% of $1,577.08, the FICA taxable wage for $120.65. So the final step is to calculate the net pay, which is $1,209.48. There's still one other topic to cover, which is grossed up pay. Have you ever heard of grossed up pay? Well, sometimes employers want to give an employee a specific amount as their net pay. Since taxes cannot be omitted, the term for this practice is grossing up. This means that the pay is increased so that the effects of the deductions are part of the computation. The desired net pay is divided by 100% minus the total tax rate, which includes all government taxes. If the amount is to be paid as a bonus, then the federal income tax must be computed at 22%. Typically, bonuses do not have insurance, 401k, or any other voluntary deductions withheld from them. Here's an example. Sawyer is an employee for Pacifica Enterprises located in the state of Washington. The firm's president wants to award Sawyer a $150 bonus at the end of the year. We would use the following steps to calculate the gross amount. First, we calculate the federal income tax and FICA. The tax rate on bonuses is 22%, and FICA is 6.2% and 1.5%, for a total amount of 29.65%. If there's state tax, you'd have to add that amount as well. To calculate the gross amount, you would divide the net amount of $150 by 70.35%, which is 100% minus the taxes of 29.65%, which is $213.22.